And we are live.
Good morning, Texas. Good morning, Louisiana. I know you're watching us on Smart Money Culture TV. Our good friends over there, our main man, Fly, Mackie, the man with the plan, as well joining us live streaming around the world on X, YouTube, LinkedIn, and a variety of other trusted places. Congress is readying. They called the central banking cartel. It's called the Federal Reserve here in the United States, and they said print up another trillion. I think it's actually 1.6 trillion or 1.2 trillion or something like that. Absolutely crazy, guys. This is insane. And I keep hearing this number. We're printing up another, or we're spending another $1 trillion every 100 days or something like that. But I don't know where you're getting that number, but that number is totally off, guys. First of all, we spent over $6 trillion last year. And remember what I said, the government's budget is always balanced, okay? It's never not balanced. They always get the money, whether they take it from inflation or they tax you on the front end for it, they always get it. So they are, looks to me like we're spending $1 trillion per month. And if the CR is correct, I think these CRs they only fund us for, I haven't been able to read the whole thing, but they only fund us for another 30 days or something like that, and then we do another one. So I don't know the exact details on that. I'll get it all. But if that's the case, then another trillion goes right along with what I've been saying, is that we're spending $1 trillion per month, which means we're like at double the rate of last year.
Doesn't seem like we're spending it.
Well, yeah, it doesn't seem like we're spending it. That's not what the people are saying over in Israel and the Ukraine and these other war zones. I mean, I think that yeah,
That's right.
we're not spending it on us. The craziest part about this bill, this new CR, is that and actually this morning as I was making my coffee, I sat there and I thought, you know what? Actually, it totally makes sense, because our central banking cartel and our government working for them, which is exactly what it is, likes to fund wars. That's what we do. We fund invasions, we fund wars and everything else. Big money. And what's happening on our southern border is an invasion. So of course we're funding it.
Yeah, we are funding the invasion, and we're not funding the stop of the invasion.
Stopping the invasion apparently is not good for printing the money, because that's
they're
the whole
supposed
thing.
to
The
fund
central
both
bank,
sides.
and the central bank loves to print the money because, of course, they make about 3%. So every trillion, they make 3% of that. Unbelievable numbers, guys. Big numbers, unbelievable. I mean, it's hard to even fathom how much money that these families in the central banking cartel have.
It's wealth beyond imagination.
It is wealth beyond imagination. You guys are running around trying to make $100 million or $1 million or $1 billion, and these guys, they're just skimming it right off the top.
Yeah, that's just a skim. That's just what they make off this one deal.
That's just a
all the other
skim.
deals.
Obama, there's a letter. It's an official letter. It's an official letter that the Vatican sent the U.S. and it's unofficial. It's official record. I'll bring it up one day. And it was something about the money, and it was tied up and this and that, and it showed that the Vatican was holding $1 billion for Obama. $1 billion. How did that guy get $1 billion? Only nefarious ways, I can tell you that.
It was holding one. He's not even a Catholic. Why is the Vatican holding $1 billion for him?
They were holding Romney's a Mormon. They were holding $400 million for Romney, and I don't remember the other name, so I won't talk about it.
Yeah, and I don't know if Trump ordered all the gold to be removed out of the Vatican. Seems like a fat chance.
Dude, that didn't happen. Leave it. I know. It's like just like the guys who were saying that Trump is still the president. Trump is president. He would not be facing a seizure of his properties on Monday. Let me tell you that, okay?
Yeah.
But, I mean, I support the man. I'm a Trump guy. I've always been a Trump guy. But I mean, you got to call a spade, guys. Our kids deserve that. So I talked a little bit about Mar-a-Lago maybe being up for grabs, but it sounds like he just might let him seize Trump Tower in New York.
I don't think they're gonna seize it, and I do have a theory that if they seize it, they're not going to be able to pay the maintenance and they're not going to be able to afford it, and Trump will buy it back for a fraction of the price. This is the type of dealing that Trump would do.
Well, I have to say that does sound about right. But we are in uncharted territory. There's never in the history of the country been a point where we are, we're a former president for I mean, there is nobody in the world that can look at Mar-a-Lago and say that property is worth $18 million. I mean, it might have been worth $18 million 50 years ago or 60 years ago or something like that. But I mean, we're talking, I mean, this place.
There's single bedroom apartments on that island that are worth $5 million.
There's single family homes that are 15 million. Like, I mean, it's like crazy, guys. Like, it's unbelievable. $18 million. There's like 36 rooms.
136.
136 rooms, like a hotel. Like, I mean, it's absolutely insane. And so the fact that that's even being perpetrated as legitimate is absolutely crazy. Just absolutely crazy. Markets are tepid as we lead into this. A bit of a pullback on crypto. Gold, oil is sticky. It's sticky over 80. It's sticky. Those guys, the oil cartel. So we have the central banking cartel, but we also have an oil cartel. And the oil cartel finally got that price over 80. They said, you guys are inflating the heck out of your stuff, out of your dollars. It's over 80 now, period. That's what it looks like to me. Interesting on the dollars thing is Milei, the Argentinian president or prime minister or whatever he is. I think he's president. He's dumping his dollars now. So remember, when he closed the central bank, they went on to the dollar.
Interesting.
But after these latest moves by Congress and the central bank and everything else, he says, this is crazy. I can't stay in dollars. And he's buying Bitcoin.
Yeah, he finally is in the profit margin.
Well, you know how it is, though, man. These guys are ruthless. Now that he's doing that, they'll probably dump Bitcoin down 50%.
Yeah. Yeah, you got to hodl.
Hold on for dear life. Hodl. That's why we say hodl. Hold, spelled slightly wrong. Hold on for dear life.
El Salvador's up. They're way up.
El Salvador is finally up, but they weren't for a while.
No, he had to hodl. Man, he had the country on the line.
He had the country on the line. He took everybody's money and he bought Bitcoin. A lot of it.
Oh, classic.
He's like a rock star now. He was here in DC for CNBC. CPAC. I mean, for CPAC. You should have seen the ladies just throwing themselves at him. Oh, man, they were lining up. David. It was pretty funny. All those conservative women. Oh, I always loved El Salvador. I love El Salvadorian men, especially when they have tons of Bitcoin. You're Catholic, right? Okay. All right. I just put up the Hong Kong Stock Exchange, and we're going on to commercial on Smart Money Culture TV. On the backside of that commercial, we'll be back with our main man, Matt Dixon, who I know has a great report for us. The Hang Seng Index, the Hong Kong Stock Exchange, is down a decent amount, 2%. Pullback. That is a decent pullback. 16,499. The markets are tepid. Oil, I would have said the markets were down, but the futures and stuff were not down. Oil is down slightly, but it's still above 80, and it could fluctuate a bit. But You know, when everybody knows that Congress is about to approve this continuing resolution again, and we got this guy Mike Johnson in, and you knew Mike Johnson, silver down about almost 1%, gold rather, silver same, silver down a little bit more. So they both been on a pretty nice tear. The thing about this, about the continuing resolution is, of course, Matt Gaetz had worked so hard to get rid of McCarthy, and he got rid of McCarthy by hook or crook. It's probably the wrong way to say it, but I was really surprised. Like 4 votes or something, and they were able to get rid of him. Just an interesting situation as it went. But and then we got Mike Johnson. Everybody voted for Mike Johnson. They all voted for Mike Johnson to be the Speaker of the House. And that is when I knew that this was gonna be a crap show. Because if everybody voted for him, that means he told everybody, "You are getting paid. Don't worry." And he went up there with his Bible in his hand. Good morning, Harvey Castro. It's good to have you here, brother. LinkedIn, one of our favorite platforms. I actually, I have quite a few calls today. Actually, I have a busy day today, as a matter of fact, David. I don't know if you know that, but pretty. I watched a very interesting. The gaming. There's a big gaming conference that's going on right now. I forget the name of it. But I watched. One of my friends told me, "Hey, listen into this," and I said, "Okay." And it is absolutely amazing what they're doing. And this I would say retail space is taking off in the gaming platforms, advertising in the gaming platforms. So you're going to hear a lot more about that from us. Good morning, Harvey. Oops, I misspelled Harvey. Sorry about that, Harvey. I'll edit that later. I'm on air. It's hard to do math and spell correctly, apparently. On air. But really interesting. And not only really interesting, but very, very profitable. People are on these games like Roblox. Roblox is like, this is like unbelievable. Everybody loves Roblox. And, but the advertising, if a lot of people are playing these games, a lot of people are in these games, and all the other ones. And it's pretty interesting too. We've had a lot of other conversations this week. We really focused on reaching out to a lot of people. So it's been nice to reconnect. Of course, we'll be in Paris in about 2 weeks, maybe a little bit before that. So Sue Base Camp. We're going to be there covering the Sue Base Camp. We're also going to be there at Paris Blockchain Week. Paris is going to be happening. And of course, I know a lot of our viewers from around the world are like, "Oh, Paris is a mess, this and that and the other." So we'll report on that stuff too. All good. Roblox added AI. Man, it is unbelievable. Roblox is like, this is the spot right now. All these metaverses that we're trying to do this and do that and building and do all this stuff. Really interesting because nobody's there. They're not going, or you go in, you log in, you're in there for 20 or 30 minutes, and then what are you going to do? You leave. But Roblox. I'm too old for Roblox. My daughter, my 9-year-old. Dad, can you please let me have Roblox? Harvey Castro shared TechCrunch. Roblox AI features create avatar 3D models. You can check that out. That link is from 3 days ago. I'll try to tweet that out after the show, but it's also on my LinkedIn. Bruce Porter. I'm easy to find. Pretty cool. But Roblox, guys, yeah, my 9-year-old. And but Dad, it's so cool. And we build and we do this, and they do. They like build stuff in there. You can build. People talk about. I mean, and we've done a lot of business with people. And, we're building metaverses inside of metaverses and this and that and the other and everything else. And yeah, they are, but nobody's there, but hardly anybody's there. But Roblox, you can just literally, the kid can there and start building stuff. Pretty interesting. Let's talk about the markets. We got Matt Dixon here. Matt Dixon, the great Matt Dixon from eBay. How are
Good
you?
morning. I'm good, thank you. Morning. Morning, David.
Morning.
Morning, Bruce.
Good morning. I know we have a lot
What's
of interesting stuff going on. I can't wait to get your take on it.
Yeah, it is interesting. Actually, I'll just share straight away because it's just been interesting to see the net inflows and outflows that we've seen on the Bitcoin ETF. I don't know if you
Yeah,
noticed that
right.
at all.
Yeah, that would be great. I would
But
love to see
quite,
that.
quite a bit of a turnaround. So we've actually seen net outflows.
Yeah.
Um,
I
and
told everybody these guys don't lose.
I trust
These
you can see
guys.
that. You can see that, yeah? Hopefully you can see
Yes.
my screen.
Yes.
Yes.
Yeah, cool. Okay, so GBTC is the pink one, the lower one, and you can see most days it's actually the buys above have well overwhelmed the sells below. The sells have all been GBTC because it accumulated a lot of Bitcoin effectively at a massive discount. And then when it came up to par value, loads of people are taking profit. And that's why money has always been coming out of the GBTC ETF, Bitcoin ETF. But money has been piling into the other ETFs. But recently, the last few days, we've actually seen that GBT sales have massively overwhelmed the buys in the other Bitcoin ETFs. So we're seeing now a net outflow, and that's reflected in the price of Bitcoin. And there's a few things. I mean, it's just
We're
strange that
going to zero. No, I'm just kidding.
it's just strange how the markets can turn around so quickly. Everyone was so optimistic. And as I was saying, when we see, do you remember we showed the fear and greed index?
Yes.
And it was at an all-time high. And they're the times you need to start to think a turnaround is imminent because virtually everybody is long the market. And so there's not many more people to go long the market. And then the moment sales start to happen, it does start to cause a price decline. So we saw really exaggerated greed in the market. I mean, a reading of, I think the highest reading I think I saw was 88, but that's really high up, right to the extreme of the dial. So there was almost definitely going to be some pullback. And we've seen quite a bit of news, negative news. At the time, everything was positive and you couldn't really see how it could go down. But that is the time you need to start to think about what can make it go down. And it's a little bit like the American economy. I wasn't even going to mention this today, but I was on a show, and we've seen this chart before, but I was on a about what could potentially turn the US economy around because Fed Chair Jerome Powell has said they're going to do 3 interest rate reductions this year, most probably. So for some reason, he's a bit negative on the US economy. But why? Everything's booming at the moment. But we saw this, and again, we've been through this over and over, but every time there's a cycle low on unemployment, there's a recession that follows. And the recessions here are these red shaded areas. And every time there's a cycle low, shortly after, there's a recession to follow. And we saw a cycle low here, and this was really due to COVID this time round. When we got the spike there, and that was associated with a short recession. But right now, as per all the cases, every single case without fail, since the 1960s, every time there's been a cycle low in unemployment, there's recession to follow. So I think the Fed does know something, and people on the show yesterday were saying, but the US economy is so powerful at the moment. What can turn it around? What can go wrong? Well, Fed Chair Powell seems to know something that we don't, which is why he's talking about reducing interest rates. So he's obviously aware. He thinks inflation is going to come back under control, down towards the 2%. That's what he said at his meeting at the press conference after the interest rate decision. And so he thinks that inflation is going to come down, despite the evidence actually showing that inflation is currently going up. But maybe he knows things that we don't. And as I say, they are talking about reducing rates 3 times this year in America. And yet, despite all of that, we saw an immediate knee-jerk reaction in the US dollar. In fact, I'm going to jump straight to the US dollar. So this reaction here, the red candles here, were the immediate reaction following the interest rate decision and the Fed conference saying that there's going to be 3 interest rate reductions. So with that in mind, clearly the US dollar tanked on the news, and that's exactly what happened. But then it's risen and actually gone back above the previous level. So what could be causing that? What could be causing dollar strength at the moment? And I've looked around the markets, and you've got to bear in mind that the strength of the dollar here, this is the DXY. It's against a basket of currencies. And so I looked around. So we had a rate decision yesterday out of the UK. They kept rates on hold, but they were extremely dovish and almost nailed on that they're going to be reducing rates very, very soon in the UK. Same in Europe. They're going to be reducing rates very, very soon. What was it? Switzerland yesterday actually came out with a rate reduction, 25 basis point rate reduction, which was a surprise reduction. So all the central banks around the world are now beginning to see risks to the downside with the economies. And so people are saying, well, what could possibly go wrong with the US economy? Because all the indications are showing that recession is coming. And yet right now, take a snapshot right now of the economy, and it looks pretty healthy. Unemployment is low. Everything actually is looking reasonably okay with the US economy. But these are the times, a little bit like that fear and greed index, when everything is looking positive, that is the time to look for a turnaround. You don't wait for the news to come, because the markets have already moved by then. So it's all about trying to anticipate. And I think, that's what the dollar is doing here. It's anticipating, not so much at the moment, the fact, bear in mind, it's like winning an ugly beauty competition, whatever they call that one.
A disaster. That's what they call that.
So America's actually winning at the moment, because it's actually, it's beginning to show signs of slowing down now, but the rest of the world is showing far greater signs of slowing down. So, we've seen big issues with China, and China are already trying to print their way out of trouble. And as I say, Europe, UK, Switzerland, you name it, they're reducing interest rates or talking about reducing interest rates very soon. So the economies are slowing. America has a massive internal economy, but it's still not completely an isolated island on its own. It does still do a lot of business with the rest of the world. And if the rest of the world is slowing down, then America will most likely be affected. And so that's why, at the moment, the rest of the world is showing more weakness than the US, and that's why the US dollar is rallying at the moment. But if you think about it, all these assets, and we're looking here mainly at crypto, but also at, for example, if we looked, at S&P, for example, the S&P 500 here, most of those assets weakened, but I love to see this one actually, because it's similar to what we had here. So, and even, basically here, we had a bit of a consolidation sideways after a strong up move, consolidation sideways. That tells us that there's likely to be a move to the upside following it. And then again, we're right now seeing this consolidation, slightly down, slightly sideways. It's telling us that most likely the S&P 500 is probably going to head higher. And we've said that we now expect it to head probably towards the top of this channel, if we scale out a little bit, towards the top of this channel before we see any concerted correction. So at the moment, the reason most risk assets are showing a little bit of downside, the same with the SPX here, they're showing a little bit of downside because the dollar is strengthening. And if you think all these things are basically valued in dollar, if you look at any of these, you can see I've got them all priced against the US dollar, US dollar, US dollar, virtually all of them. In fact, I think all of them against the US dollar, including gold even is priced against US dollar. So if US dollar is strengthening, then you need more of those assets to match the dollar. So when you have, it basically means if the US dollar is strengthening, these assets are actually going down in their dollar value. And that's why we're seeing a downturn in general across the markets today. Yes, there's some outliers like Doge, which we know is one of those ones which can do anything at any time. These meme coins, look at this.
BNB is having a great day too.
Yeah, well, Book of Memes is showing, so BNB is having a stellar day there. So yeah, Binance itself actually obviously went through some tough times after CZ moved on. And it went through some tough times, but Binance is actually doing really well. I think they listed some of these meme coins immediately. Normally it takes months of negotiation and dealings to get listed on Binance, But they got some of these coins listed immediately on Binance, like Book of Memes and a couple of other of these meme coins. And there's been massive volume on there. So I think from a BNB perspective, where there is this buy and burn policy, I think it's actually good for the BNB token. So that's kind of a good token from a fundamental perspective because it actually has earnings behind it. And what that brings me on to is looking at Ethereum, the news that came out. I haven't saved the link actually, but I understand that Gary Gensler is taking aim at Ethereum. And because, so he's basically saying Ethereum should be classed as a security. And that's obviously, if that were to happen, it would be devastating for Ethereum. We wouldn't see that, at the moment, we were pricing in that Ethereum is going to be the next ETF. And so if that were the case, and Ethereum is listed as a security, it's going to be a major problem, a real major problem, because probably somewhere now between 50 to 70% of tokens are still on the Ethereum blockchain. It would be absolutely devastating.
I think, who knows, right? But I think it's a whole bunch of market manipulation again. They're about to pump to infinity. who knows? But it's like they're about to pump to infinity, and here you go. Oh yeah, obviously, Ethereum has been Ethereum since the beginning. They did a big raise. They had tons and tons of different tokens launch on there and do big raises too. Ethereum has been Ethereum since the beginning. It's just crazy that they posture like this all the time.
Yeah, the change has been obviously since it's gone proof of stake, and what they're saying is that basically as a validator on Ethereum, you're basically earning a return on your investment, and it's so true. That's why he's saying it's potentially a security. So that's obviously not the case with Bitcoin, not the case with a number of those that are mineable tokens, but Ethereum is now a proof of stake token, and that's why he's taking aim and saying any of these proof of stakes are potentially securities.
And the guys, there's a way out of that too. If you're crypto people and you're watching, you can have a proof of stake and a proof of work coin. I'm going to be moving around a little bit, but continue. I have to. It's high school time for my daughter, so she has to visit one place. But go ahead.
Yeah. So there's a big difference between, for example, XRP and Ethereum. So XRP was deemed in general. It wasn't actually clear cut, but the court case deemed in general that XRP was not a security, and certainly for retail investors, it's not a security, and that's why XRP wasn't absolutely clear. So it didn't go to the moon at the time, but it did have a really good jump. I think it was somewhere around 50-cent mark. It jumped to about 90 cents at the time, so it had a really good little run, but it wasn't absolutely clear cut, and so that's why XRP was a clearer cut case than Ethereum, which is potentially more of this, as it is purely now really a proof of stake token with validators that actually effectively earn return on their money. And if you're earning a return, it's different. It can be classed according to the Howey test, isn't it? Where they test whether it's a test really for whether a security or an asset is a security or a utility.
We need a Dixon test. Forget this Howey guy.
Yeah, who's this Howey guy? He's been around.
Who is this Howey guy?
He's been around even longer than me, though, to be fair. And that's saying something. Yeah. So here's the Litecoin. And again, I'm still actually thinking, although I said yesterday, I haven't changed my mind. We may get some short-term little pullbacks like we're seeing because there's immediate dollar strength. Oh yeah, that takes me back to, let's just look at that dollar and see what's happening. So DXY, let's look at it again. What was interesting, we have double bearish divergence here. So you can see here higher prices on DXY and lower peaks on the RSI. So that's telling us basically that a reversal should happen sometime reasonably soon. We're beginning to see potentially, maybe it started with this little red candle beginning here. This is on the 1 hour. It's also got double divergence on the 4 hour as well. I haven't checked the daily. We'll just have a quick look at the daily and see if there's anything there. Just have a quick look. Yeah, I don't see any divergence at all as yet on the daily, but certainly on the 4 hour and the 1 hour, there is double bearish divergence. So that's telling us potentially that the dollar is going to reverse to the downside. So maybe it's just a short-term thing. But when we looked at Ethereum, that was actually a different kind of divergence that we have. And this is all good stuff for us to look at these technical indicators. This one is what's called hidden bearish divergence. This is when you get lower highs on price, but corresponding higher highs on RSI. Again, this is both over the 1 hour and the 4 hour time frame. We've got this hidden bearish divergence. And what this tells us, unlike the other one, which told us a reversal is coming, when you have hidden divergence, it tells you of a continuation of the price trend. And so we see here the drop in price, and that's shown by this joining the peaks here. But it's basically a downtrend in price overall. It's telling us that downtrend is set to continue. And it's really an amazing indicator. Just look at what happened precisely from when that was drawn, when we saw the peaks and drew the corresponding lines. The price just dropped on the button effectively. The price dropped and now rose a little bit, but continued to drop a little bit again. And this is one of the few leading indicators. Nearly all indicators, as we said before, are lagging indicators, all based on previous historic prices. But this is one of the few leading indicators, and it's one of the more accurate. Again, I would never use it entirely on its own. I look to support it with other indicators, but it is quite a good, powerful indication there. So going back to dollar index, again, I think that most probably we will see with this double bearish divergence, and as I say, we've got between this peak and this peak, higher highs on price, lower highs on RSI. Between this peak and this peak, again, higher highs on price, slightly lower highs on RSI. So once again, this is a double bearish divergence signal that price should decline fairly soon on the US dollar. So we can conclude that the rest of the world is kind of leading the way with interest rate reductions. But America, while it is the most powerful economy in the world, it still doesn't live in complete isolation from the rest of the world. Even though it has this massive internal economy, they produce most of their own energy now with their own oil production, so they're very, very self-sufficient. Even so, a lot of American business actually does business with the rest of the world. They're, massive amount of business. And don't forget, America is the reserve currency of the world, so everything is traded in US dollars. So when the rest of the world is beginning to have problems with growth and they're reducing interest rates, as we saw with Swiss Central Bank yesterday, and all the others like the European Central Bank and the British talking very dovishly, the next rate decision is probably going to be to the downside. Let's see if America, they might just do it all in concert. Usually they're within just a matter of days of each other. So the next one is, let's see where we're now. It's next one I think is in June, isn't it? So we've got May, isn't it? Next one is May. So we'll see whether May or whether it's June that we get the interest rate reductions coming through. But I think America will probably be the last to lower their rate, which is, again, probably why we're still seeing a little bit of residual strength in the US dollar. But that will turn around once the US do start to lower rates, which I have no doubt whatsoever, especially based on this. As I say, effectively the chart showing the unemployment. But we could show lots of different charts. And one of the most important indicators is what they call the inversion of the yield curve, where long-term interest rates are lower than short-term interest rates. Now, that's not normally the case. People normally have to pay more interest if you want to borrow off them for longer. When long-term interest rates are lower, that means they're very bearish, the US economy, meaning they think that they're going to have to lower interest rates a lot in the future. And that is the situation we have right now in the US economy. We have basically an inverted yield curve, and that is one of the surest signs that recession is coming. So whatever you hear from these people on CNBC or wherever it might be, that the US economy is booming, bear in mind and just remember, fear and greed index, we're at a situation of extreme greed. The markets are at all-time highs. Yes, we probably have a little bit higher to go. But again, remember that Sid Norris, the long-term chart, the 100-year stock index chart, telling us that we're somewhere near. When you're looking at that scale, super cycle scale, you can't be precise about actual turning points, but we're somewhere at or near the turning point, and that actually even fits now with the shorter term charts that we only have probably a little bit higher to go before we see a potential turn in the markets. We even saw a downturn in gold. So as I say, even gold is kind of inverse with the US dollar. When we see strength in the US dollar, we tend to see weakness in gold. We've seen quite a turnaround from that big pump we saw in gold when we see potential inflation worries. We've seen inflation going up in the US unexpectedly, and basically since that time we've seen the US dollar strengthening then off the back of that. So the US dollar has strengthened, and gold has in inverse correlation has actually fallen quite a bit. So it's just good to keep in the back of the mind all that's going on, all these jigsaw pieces, fit them all together, and it gives you quite a clear picture of where things are going. But I still think even if we're due a further correction down, we may well be, I still think we've not yet finished this particular bull run within crypto, within risk assets. And as I say, I showed you within the SPX there, I still think there's higher to go. And I think with nearly all of the risk assets, even Bitcoin, I still think we're going to see new all-time highs. But the sentiment has changed for the time being. And that was clearly shown with the ETF inflows, outflows that we showed a few moments ago, where there's more outflows right now than there are inflows. So that was something we didn't think could change very quickly. We thought all this institutional money piling in, but it just shows you they're all very, very sensitive to what the Fed say. And as I said, the big event to wait for was that Fed rate decision. And that's just turned things around almost on a sixpence or on a button or whatever, however you like to put it. That basically the markets right now have turned for the worst. But I think it's just temporary. This is kind of impulsive to the upside. The downside moves are corrective. This up move here overlapped this down move here. That tells me this is a corrective move down. The trend is still higher. So I do still think we're going to see new all-time highs on Bitcoin and the rest. So that's the kind of summary. I'm happy to go over any other particular discussion points, but I think it's pretty clear that the markets are just correcting for the time being and will push higher again soon.
New all-time high. So one thing I wanted to say, it'll be interesting because the halvening that was not the last one, but the time before that, we had a market move in this time between the halvening and this pump, which is a very normal pump, and that was 38%. And then the last halvening, it was 20%. So I'm watching very closely to see if we have a continuing trend here, where it's going to be more like in between 10 and 20%, or if we're going to go ahead and
I'm not a big fan of these repeating cycles. Yes, sometimes we can see that. I'm just scrolling back, by the way, through my Twitter just to look for those halvening events, because I know I did post them somewhere. I'm just seeing if I can see it. I think this could be it. No, that's Japan. If I can find them or not. But anyway, I'm not a great fan. Yes, sometimes these things really do repeat. The chart I showed you before, for example, I'm not just looking at something repeating here. We're actually looking at a particular situation where you see US unemployment at all-time lows, then you see recession following shortly after, because the whole thing is going to turn around. And that is very cyclical. But it doesn't mean that necessarily everything follows these cycles that that's just going to replicate a previous price move. There we are. That is the previous halving cycles that you mentioned. So we can see following the halving back in 2012, some massive price appreciation, and we could actually work out the amount of appreciation. But as you rightly say, each time it's been less, hasn't it? So from 2012, you could see here a very, very big move in the Bitcoin price appreciation. Then 2016, we saw another massive appreciation, but slightly less. The last one in 2020, we saw, again, good appreciation, but somewhat less. And now we're just approaching, and it's penciled in to be April the 19th, the next halvening. You don't know exactly, because every 210,000 blocks, And the timing of those blocks is not absolutely precise. It's about 10 minutes per block, something like that, but it's not absolutely precise. So at the moment, it's looking like April the 19th that the next halvening will take place. And so we could, and from the look of it, it actually looks reasonably likely that we're going to see some solid appreciation following it. But notice the previous ones, just before the halvening, here, particularly in 2016, we saw a bit of a downturn. It doesn't look much here, but actually, when you're there sitting on it in real time, that's actually quite a big pullback. And this up move here is massive. Again, here, just before the halvening event in 2020, we got a bit of a pullback, and then you got the acceleration. So maybe that's just what's happening here. Maybe it is just another repeating cycle where we perhaps get a little bit more of a pullback, and then you get the acceleration to the upside after the halvening event. So that is how it looks at the moment. Entirely possible, although we do need to look at RSI here. It's massively overbought at the moment, but we can see the previous, I think this was the all-time high, it was higher than it is now. So there's still room for upside, but I think we probably are due a little bit of a pullback, a bit of a respite, but I think that we're definitely, the halvening event will probably play out as per usual, but maybe, as you say, we're just seeing a bit less reaction each and every time. And that would make sense. If you think about the adoption of Bitcoin, there's more and more institutional adoption. So as it becomes more and more liquidity, more market depth in Bitcoin, then it takes more and more activity to create a price movement, and it becomes more of a stable. So it becomes more like digital gold, actually. So it becomes more and more of a stable, mature asset as time goes on. So it stands to reason, makes absolute sense that this time round, after the halvening, we probably will see another really good upside rally. And just looking at this, I mean, who knows? It could go to 250,000. It's entirely possible. That is possible. We're not guaranteeing, we're not predicting, but it's entirely possible it could go there. But that would be a much smaller percentage move than we've seen previously. It would still be an absolutely amazing rally. But short term, we might see a bit of a pullback. So I think that's a really nice chart just to show us where we are with the halvening events. I think I may have lost you, Bruce. So as you stepped away, I think you're back, aren't you, Bruce? Just talking about, I think you're absolutely right with those halvening events that potentially, like every other time, we could see a bit of a downturn, but then probably a reduced upturn in price after the halvening event. So, yeah, I think that's pretty good in terms of expectations. And as I say, I don't normally like to just look at repeating cycles, but when, again, this is actually around a particular event, around the halvening event, it does make sense. If we're reducing supply by 50%, which is actually what's happening, then, and there is still solid demand, even though we've seen a few days of selling off with ETFs. But if we see a halvening of the supply, which happens probably April the 19th, then it does make sense that the price would appreciate. And as I say, from that chart, it actually looks entirely possible that we could appreciate to that 250,000 mark during 2024. Who knows? Maybe this is going to be an amazing year, the election year, when risk assets continue to pump, because they can continue with easing monetary policy, lowering interest rates, making sure the stock market is fed, because there are actually 3 mandates. People think there are only 2 mandates for the Fed here, about basically controlling unemployment, and there's those, but the third mandate that people don't talk about, which is actually now implicit in what they do, is actually controlling market volatility, effectively keeping markets stable. That is the kind of third mandate. And they're doing that by supporting the market through liquidity when it's needed.
Oh yeah, they always, people say, oh yeah, no, I mean, it's kind of the whole thing's gone out the window. But I mean, I remember as I was growing up, the Fed doesn't trade, the central banks don't trade. In actuality, I mean, that's one of their jobs, as they state, is to keep the.
Yeah, they do say. Not many people know it. They know that they're supposed to control interest rates and inflation. Basically, they're supposed to control inflation, and they're supposed to control employment. Yep. But not many people know that they actually are also supposed to control the markets, and they do control the markets. And it's
very well. They control very well. And And one of the ways that they remove, and everybody should be conscious of this, one of the ways that they remove liquidity, that they remove fiat money from the markets, historically, is crashing commodities. And what they'll do is they'll crash the commodities, and then they'll buy them back. And they do it very effectively with Bitcoin. They've done it over and over again. And then basically all that money in between the price that they sold and the price that they bought is gone, poof, effectively. I mean, obviously they would argue they had it, but that's exactly what they want. And if you don't think that that's true and that's what's happening, just ask the traders. They have the money anymore.
It's actually amazing the tools that they've created to manipulate the markets, tools they didn't used to have only a few years ago. And now all these, you hear about some crazy named tools that they have. I mean, who'd ever heard about quantitative easing, before the year 2000? It was, brand new term. And now they're talking about twists and all sorts of things that they do, quantitative tightening, and it's crazy. The stuff they do now, they're able to manipulate markets so powerfully, and they will just create new ways to do it moving forward. So leaves retail traders with a steep hill to climb.
Yeah,
which is why Bitcoin is so popular, because at the moment it's one which is not controlled by the Fed so much, because it's got that limited supply. It's actually pretty much untouchable. And we know that China tried to ban Bitcoin and it failed. I mean, China, what a massive powerhouse they are. They failed. Even if America tried to ban Bitcoin, yes, it's going to have a massive impact initially on the price, but they can't get every validator and miner. They can't really hit every miner, because you can be mining, I can be mining, anybody can be mining. So it's impossible for them to hit everybody. So Bitcoin should still exist as an independent, decentralized cryptocurrency, which is why it's still the grandfather of them all.
Yes, absolutely. Well, I'm going to on that note, I just sent over a query here. I'm gonna step out. I got to get to my oldest daughter. She's visiting one of the schools and doing a roll through. But there's some videos about the Federal Reserve that I think David can take from here. And I am signing off. Have a great weekend, guys. And
have a good weekend.
Thanks, brother.
Enjoy the kids. See you, Bruce.
Nice. Yep. Thank you very much, guys. So I will share my screen here. Present this video and roll with this.
What we're going to be looking at, Dave? Oh, okay.
Welfare state. If you want to police the world and pay for the defense of Japan, we don't want a government like this. This is not the kind of government that was designed by our owners of the country. It's not what was written in the Constitution. We've only had an income tax since 1913. If you want a welfare state, and if you want to police the world and pay for the defense of Japan and Germany, send foreign aid to the Soviet Union, you not only need the income tax, you need the Federal Reserve to print up the money when the deficit accumulated. So we think government should be much smaller. If government is small, then you don't need an income tax. Yeah, you can't have a government like
that up there. So very focused on being cost effective. We actually fund ourselves and then work out what dividend is needed to pay. So we kind of work that it's a great business to be in central banking. Print money and people believe it, and touch wood. And so it's a slightly different beast.
You got to hear that one again.
Challenges, etc., that are there. So very focused on being cost effective. We actually fund ourselves and then work out what dividend is needed to pay. So we kind of work that it's a great business to be in central banking. Print money and people believe it, and touch wood. And so it's a slightly different beast.
Yeah, crazy stuff.
That was a classic.
Yeah, so it's just amazing. I mean, this is a genuine problem.
Those institutions, the FBI came in, and interestingly enough, the one thing that Woodrow Wilson did, he used the FBI to spy on American citizens and actually arrest them if they disagreed with his foreign policy about going to war in Europe. And isn't it interesting how recent they used it in the Vietnam era? Democrats used it there, and Republicans used the FBI to spy on 100 different groups in this country, including the churches, who disagree with the policy in Central America. It almost looks like the FBI was designed to spy on Americans who might be disagreeing with policy, especially the foreign policy. So the FBI, although I don't think I could condemn everything they've ever done, because I'm sure some of the investigations and investigation of crime has been beneficial, but that could be accomplished through Justice Department within our states. We wouldn't reject that portion of it. I think the FBI has kept and continues to keep a lot of records on a lot of individuals. The CIA has only been here since 1947. Their record is lousy. I mean, just think of the CIA used by the Democratic administration to.
Yeah, crazy stuff, isn't it? So interesting to see. I mean, it's actually a fact, proven fact, that government effectively is bureaucratic. They don't produce anything. Effectively, they're shuffling papers around. They're not actually producing anything. And so I mean, this is the kind of final stages, really, when you see government absolutely out of control, and the amount of government spending is absolutely crazy. And all they can do to stimulate the economy is effectively create war. And, you know, it's about arms manufacturers selling arms, etc. So it's not the right way to push forward. We saw, I think, Hong Kong many years ago, that they cut government, really slim government, right down. This was before China even took over, and it had a massive positive effect on the Hong Kong economy. And that is, you know, one very good way to try to stimulate the economy. Short term, it looks good. It's a sticking plaster to actually spend money on these big government initiatives, because it's just throwing money into the market, but it actually doesn't create real productivity in general. So money is far better spent directed towards private enterprise, private businesses that actually do create real jobs for people. Government aren't real jobs because they don't produce anything. As I say, they're just pushing papers around effectively. So,
wow, that's true. Perfect.
yeah.
So we're at the top of the hour here. Another great show and a great week. Matt, thank you, and we'll see you Monday.
Yeah, thanks, David. Regards to Bruce, and thank you, everybody. It's been great to be here. Enjoy your weekend, and bye for now.
Cheers. Stay tuned, and you'll stay lucrative.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.